Several crypto whales have still continued to grab the opportunity to add more XRP amid the price dips. Recently, whales went on to add around 143 million XRP, approximately worth $55 million. Why are they still buying even amid all of the controversy surrounding Ripple Labs versus the SEC?
Boom. Now let's talk about XRP and China. First up, XRP whales holding more than 100 million XRP have added 334 million XRP to their wallets. The balance sheet at 17.7 billion now, and 55 wallets hold them. Ripple owns another 7.1 billion. Total whales plus Ripple is 24.8 billion. Their plan is working. And what plan do you think that could be? To shake you out and to buy your bags. And that's exactly what this is showing. People are being shaken out. These whales are coming in and they're scooping everything up. You have to ask yourself, what do they know that we don't know? There's a lot that we don't know. Let's be honest here. There is a lot that me and you do not know.
Top whales are quietly stacking XRP by the billions. Could they be holding the secret to its next explosive rally? Imagine sitting on the sidelines while the biggest players in crypto quietly scoop up billions of XRP tokens, moving the market needle without a peep. What if those huge wallets you can barely track on-chain actually hold clues about where prices are headed next? In this video, we'll peel back the curtain on recent whale behavior, dive into an under-the-radar banking play on the XRP ledger tied to one of the richest figures on Earth, and reveal why consolidation right now might be the calm before a historic storm. By the end, you'll understand not just what these whales know, but how you can ride their coattails toward what could be XRP's next big move.
The XRP whales are buying. In the last 30 days, XRP has been down as far as about 12+% in the last 30 days. And the whales have been buying. They have been adding to their position. This is food for thought. Is this what the smart money is doing? I definitely think so. Again, they buy on the dips, right? Food for thought, something you need to know about. Huge fan of XRP. Hit that like button. Let me know that you want me to continue to make content for you. But the XRP whales.
The Ripple whales are betting big on XRP in the futures market as it hits 2.5 billion OI. That is open interest. All of this coming after Gary Gensler stepping down in January. That news broke. XRP started to run like crazy, and we have seen some explosive activity and growth from XRP, Cardano, Dogecoin, and some other top plays.
Let's start with the whales. Over the past week, on-chain data shows a staggering influx of XRP into a handful of addresses many traders suspect are owned by institutional players. During a price dip, these whales scooped up nearly 1 billion XRP at rock-bottom levels, sending a clear message. They expect that consolidation we're seeing now to break sharply to the upside. In chart terms, XRP's highs have been sliding lower, while its lows have been inching higher, forming a classic tightening pattern. This isn't mystical chart voodoo. It's simple supply and demand. As volatility compresses, price is squeezed into a smaller range until it bursts one way or the other. And when whales load up during that squeeze, it's usually before they push it higher. Now, why might these heavy hitters be so confident? First, there's the growing mainstream banking narrative around XRP. Bitcoin has enjoyed celebrity spokespeople like Michael Saylor and Anthony Pompliano going on CNBC and Fox to sing its praises. Until recently, XRP's story was largely confined to crypto circles, leaving many traditional finance bigwigs in the dark. Enter David Strazevsky, a name most viewers may not recognize yet, but one you'll want on your radar. Suddenly, he's popping up on top-tier financial news shows, laying out how XRP and the XRP ledger solve real inefficiencies in cross-border payments. His message? Bitcoin's network can't match the speed, cost, or regulatory compliance banks demand, but XRP can.
So an anonymous whale withdrew 31 million XRP to his wallet. Then we had 2 other transfers moved, 29 million XRP and then 27 million XRP moved to major exchanges. So some of these are internal transactions done by Ripple. A lot of this is just from a security standpoint. They like to move money around, don't leave it in one spot, maybe diversify it out into multiple wallets. That's common practice.
Who's not in already? I mean, I guess as we're talking about technology here, and Liz just showed us all these major innovations that are coming. No, there are incredible things that are coming. We've got the most pro-crypto president right now in the United States, 60% of Congress that's on board. This is the moment right now in history where this is the chat GPT moment for crypto, right? Where it's now coming out to the next level. And Ripple, XRP, is going to be probably the highway that most of the financial systems are going to be driving through here in the future. It will not be Bitcoin.
What makes that shift fascinating is who listens to mainstream financial media, people with large portfolios at institutions like Charles Schwab or Fidelity. These are savvy investors who know markets inside out, but they've been missing the XRP memo until someone like Straussky steps in. Once these traditional finance leaders grasp that XRP Ledger is not a speculative gamble, but a working payment rail, the demand dynamic changes overnight. It goes from retail traders chasing the next meme pump to banks and money managers moving real money, exactly the kind of deep-pocketed capital whales want to follow. Speaking of banks, let's talk about Nubank in Brazil, an upstart financial institution backed by none other than Warren Buffett's family office. Nubank recently announced it's listing XRP for customer purchases and has become an on-demand liquidity (ODL) user on the XRP ledger. In other words, they're using XRP itself as the liquidity bridge in cross-border transactions. But here's the kicker. During Ripple's legal battle with the SEC, Nubank quietly donated significant funds to help Ripple fight back. That level of institutional conviction is rare in crypto. When a bank with such heavyweight backing not only uses XRP but also invests in the underlying company's legal battles, it signals they believe in the long-term utility, and they're happy to show it on-chain.
Charles Schwab, a household name, a significant investment company with $7 trillion under management, has announced that it's going to enter the crypto market. That's right. The current president, Rick Wurster, soon to be CEO of Charles Schwab, I believe January 1st, 2025, will be offering spot crypto trading based on preferences with his clientele. What do others think?
So for the first time ever, we are going to see a lot of these financial institutions that might be crypto curious have the capability to actually get exposure to XRP's price. Now, if they start looking into, getting exposure to XRP's price, it's probably just going to send them down the rabbit hole and learning more and more about XRP itself, and likely probably leading them to then want to own spot XRP.
Now, back to price. Let's zoom in on XRP's USD chart. Over the past 3 months, price action has carved out a symmetrical triangle, a textbook consolidation pattern. Every time XRP dipped, whales swooped in. Every time it spiked, they held firm. That tells us they're in accumulation mode, waiting for the breakout. And it's not just against the dollar. When you chart XRP versus Bitcoin, the same pattern emerges. The token oscillates between being undervalued and overvalued against BTC, and right now, it's breaking toward the top end of its long-term range. Historically, these moves precede periods where XRP outperforms Bitcoin significantly. But why now? A few catalysts are converging. First, the US political environment appears more crypto-friendly than it has in years, with legislation being floated that could grant digital assets clearer regulatory status. Second, the Ripple SEC case is rumored to be nearing resolution, which could clear a massive legal overhang that's kept institutional desks on the sidelines. Third, partnerships and ODL corridors are expanding, from cross-border corridors in Asia to Africa and Latin America, proving real-world demand for instant settlement. Each of these factors alone could ignite a rally. Together, they form a perfect storm.
There's so many different price predictions for XRP. And I think a lot of people make their price predictions based on how much XRP they have. And they say, well, price needs to get to that for me to make the amount that I want. So that's where XRP is going. I look at things a lot more logically. I use Fibonacci's. I pay attention to the utility, to the partnerships. I also spend a lot of time studying the foreign exchange market. So I know the value of XRP long-term when adoption is fully implemented. Now, I don't think XRP hits $30 or $40, even $50 this cycle. I think it hits somewhere between $8 to $13 this cycle. But when assets mature over long periods of time, just like the Microsofts and the Amazons and anything that has long-term utility and value, you absolutely can see 3 and 4 figures over long periods of time.
10 years out on the financial crisis, we still don't have the infrastructure perhaps to prevent the next one. And I think this is where digital assets can really help, because an efficient digital asset can really solve some of the key problems in global liquidity. You know, the world's got trillions and trillions of dollars tied up in liquidity just to get around how clunky the movement of value is around the world. If with a really efficient digital asset, something like XRP, again, that's what we believe will be the most efficient, you can now reduce trillions and trillions of capital from being tied up. So you can make those transfers instantly as a bank or as a payment provider or as an enterprise without having to have money pre-positioned all over the world.
And that's where the whales come in. They don't just buy based on charts or hype, they buy based on fundamentals. When you have on-chain snapshots showing them acquiring XRP in droves, it tells you what they know. A confluence of institutional adoption, regulatory clarity, and macro tailwinds is about to break price out of this consolidation. In plain English, they've done their homework, and they believe you'll want to be long when it happens. You might be wondering, okay, whales are buying and banks are adopting, but what about retail? Where do everyday investors fit into this? Here's the beauty of a breakout. It grabs attention. Once price starts moving, FOMO kicks in. Retail buyers who passed on XRP earlier see that triangle on their charts and think, I'm too late. They pile in, which fuels further price gains. That's how you get those parabolic moves. Whales know this dynamic, and they're loading up now to ride that wave from the front.
There is a whole bunch of XRP that is moving around, millions of dollars, close to billions of dollars of XRP moving around in very mysterious ways as I've been watching these wallets. And what we can see is that millions of dollars are leaving exchanges, especially Binance here, and they're being put in cold storage. They're being put in massive amounts, look at this, into these external wallets, these cold storages.
Crypto markets are driven by narratives as much as numbers. Right now, the story is, top whales are buying XRP. What do they know? That question alone will draw newcomers, click-throughs, and viral social chatter. That narrative amplifies the breakout. It becomes a self-fulfilling prophecy. Whales buy because they see fundamentals. Retail jumps in because they see whales buying. Price explodes. Headlines shout, whales were right. And suddenly everyone's on XRP's bandwagon. Of course, no rally is guaranteed. Markets can be unpredictable, and unforeseen news can toss even the best-laid plans into disarray. But the convergence we're seeing, on-chain whale accumulation, institutional adoption via banks like Nubank, regulatory optimism, and a technical consolidation ripe for a squeeze, has rarely looked this compelling. If you believe, as many of these whales do, that XRP is set to be the highway of the next financial rails, then today's consolidation is your cue to pay attention.
So this is very important. One of the most critical aspects of investing in crypto is understanding market psychology. Why? Well, look at this. Less than 1% of the world's population bought Bitcoin at its lowest points. In contrast, 99% of investors tend to buy at the top. And this is what we talked about earlier, only to get caught in the market correction orchestrated by the 1%. This is the 3 stages we talked about earlier, when people buy at the top of the market, which is the 3rd stage in the bull market, at the peak, and then the market has a correction and they get wrecked and have substantial loss. When Bitcoin and other cryptocurrencies reach new all-time highs, this is when mainstream media will undoubtedly cover the story extensively.
As the market waits with bated breath, one question looms larger than ever. When will the breakout finally come? To answer that, let's dig deeper into the interplay of on-chain movements, technical patterns, and real-world adoption that has whales sharpening their claws right now. First, let's revisit the whale activity from a behavioral standpoint. Whales don't move billions of dollars of digital assets on a whim. They move like sharks, silent, deliberate, circling their prey until the moment to strike. When we see these ornery wallets accumulating during a lull, it means they've identified a zone of maximal risk-reward. Taking profit or buying in a tight consolidation both carry risks, but whales are masters of risk management. They average in, stacking more when dips hit predefined support levels, and they refrain from panic selling when price wobbles. That disciplined approach means accumulation is happening at the very levels most retail traders perceive as dangerous, and that sets the stage for a squeeze. When the pattern finally unravels, the lack of large sell orders near the breakout point allows price to surge more violently than normal.
So that alone, in my opinion, has massive utility. But I want people to understand, even if no one did subscribe to the idea of actually using XRP, I still think just the core premise of the XRP ledger being integrated in these very important places would drive demand for XRP the likes we have never seen in almost any cryptocurrency before.
The pattern of XRP, boom, dip, repeat. Ever notice how XRP always seems to follow a pattern? First, it surges fast, news drops, partnerships announced, price spikes, then it dips. Hype fades, people panic, they call it dead again. But here's the twist. XRP always comes back, and it's not by accident, it's because of utility. While other coins rely on hype, XRP is built different. Transfers in 3 seconds, fees under a penny. And now, legal clarity, ETF filings, and over 100 bank partnerships. I can't stress these 3 points enough. They're not just features. They're what fuels XRP's resilience. Look at the chart. Every dip has been followed by a bounce. And with the market stabilizing, XRP might be gearing up again. Is it predictable? No. But is there a pattern?
Next, let's layer in the technology narrative. XRP's core value proposition is fast, cheap settlement. Unlike Bitcoin's proof-of-work model or Ethereum's congestion-ridden smart contract chains, the XRP ledger processes transactions in 3 to 5 seconds for fractions of a cent. In practical terms, that efficiency can translate into hundreds of millions saved for banks moving billions every day. Now, picture a global bank that previously spent millions on foreign exchange fees and liquidity locks. By shifting even a sliver of that volume to XRP's on-demand liquidity, they slash costs, reduce counterparty risk, and free up capital. When Nubank in Brazil publicly disclosed its ODL corridors using XRP, it wasn't just a PR stunt. It was a proof of concept for every multinational bank watching. Whales see that, and they know the narrative is shifting from XRP might work someday to XRP is already working today. On the charts, consolidation patterns like the one we're in are notorious for false breakouts, sudden spikes that quickly reverse, trapping traders. But true whales can sustain moves. They can hold through the noise, reinforcing breakouts by legging into fresh orders as price climbs. Imagine price punching through the triangle's upper trend line. A few thousand retail stop-loss orders clear out, triggering a cascade of market buy orders. At that moment, whales step in behind the surge, providing liquidity at higher prices and preventing a snapback. That dynamic not only propels price higher, but it also sows confidence. Institutions begin to see that when XRP breaks out, it holds its gains. That track record is invaluable for attracting new capital.
Ripple is going to make ODL metrics available for institutions and individual clients. What does this even mean? ODL means on-demand liquidity. Basically, Ripple's going to allow you to see the usage of ODL on their website. Basically, this means we will finally be able to prove who and how many banks or institutions are using Ripple's on-demand liquidity service. There has always been people in the crypto space saying that Ripple does not even get used actually, like it's actually not being used, and they say that XRP is not being used at all, but now we will finally be able to see exactly who and how it's being used.
In the end, the question isn't just, what do top whales know? It's, what will you know, and when will you act on it? As we've seen, the whales are methodical. They accumulate quietly, they move before the news breaks, and they position for structural shifts in adoption and regulation. Whether it's banks in Brazil, whispers of central bank pilots, regulatory clarity on the horizon, or the compression of price into a breakout-ready formation, all signs point toward a monumental move in XRP. For those who have followed the on-chain breadcrumbs, the narrative is clear. The next chapter of XRP's journey isn't a matter of if, but when. And the authors of that story are the very whales filling their wallets today. So as the countdown to the breakout continues, consider this your invitation to join the conversation, sharpen your strategy, and perhaps ride the wave right alongside them. So, what do these top whales know that you don't? They know that XRP isn't just another altcoin. It's a liquidity engine for the world's payment systems, backed by real bank use cases and massive wallets ready to pounce. If you want to stay ahead of the next big move, keep one eye on those on-chain whales and the partnerships unfolding on the XRP ledger. If you enjoyed this deep dive, make sure to subscribe and hit that like button, because the next chapter in XRP's story is about to be written, and you won't want to miss a single update.